Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today let's take a look at the euro currency. Well, in general, market still stands in the same area, and as we said and mentioned in yesterday's video, the shape of the market probably will change a bit. And currently we need to estimate the possible price action within the nearest time, because it could be different. Currently you could see that in general the sentiment and the positive mood on the market, especially on the euro, still stands strong, because yesterday, if you'll take a look across the board on different currencies, the euro shows the minimal, among other currencies, reaction on the Fed statement. And the drop that we saw yesterday, it was really, well, very small. That it's a warning sign, because we expect deeper retracement, and we are keeping an eye on the potentially bearish price action, potential bearish scenario, because in general this standing around this level gives us bearish stretch pattern, as we said in our weekly report, because market reached the sale that we have said. This is strong confidence resistance area on the weekly chart, and what's more important, this market is at the overbought. It just technically can't continue upward action immediately, but it could react differently on this sale. The one reaction that we would like to get is deeper retracement, at least to the 87, or even, as we said initially, to the 11 even area. That would be just perfect, because it will give us great chance to take the long position. That's the first reaction. Second reaction, if market will start calling around this area without no significant drop, just building an energy below the overbought area, that will be very bullish, and it will tell us that in the current circumstances it's better to avoid any short positions. And of course, in this case, we probably will not get any clear and well set bearish patterns. We'll get some consolidation probably. That will be the background to consider taking of the long position right at this point, without no expectation of the deeper retracement. So I hope it is not too sophisticated. Well, in two words speaking, we just need to see the way how market will behave here. Now, from the technical point of view, the background for the deeper retracement exists, because as we said, we could get double repo sell here. On the daily chart, well, it seems that it was too fast action here, because market has not crossed the 3x3 moving average with this action. But overall type of the action very similar to the double repo, because market has formed the top, then it has tried to pass through the top, failed, and returned back down. This is how double repo usually works. This is the failure of the bulls, capitulation of the bulls to proceed upward action. And that's reasonable, because market at the overbought. Bulls just can't push the price through this area. Also take a look, the weekly pivot resistance one holds upward action. That's a good sign for a potential retracement. On the 4-hour time frame chart, we have clear divergence, and very probable that we should focus on either head and shoulders pattern. Here is not good relation between the tops for the double top. It's because it's clearly the 127 range between this top and that top. Or we also could get alternatively free drive. This is also possible if, say, market will show this pullback. In this case, it could show the 1460 upward action, and only after that, retracement could start. Why I'm talking about the free drive? Although the shape of the hand shoulders now you could see that could be formed, because guys of this reaction, usually when the hand shoulders forms, or double top forms, or capitulation of the bulls happens, here should be more straight downward action. We do not see it. We see the consolidation right at the top. This is not typical for the bearish market. And that makes me think that if downward action will happen, but it will be gradual, slow, in this case be prepared for another leg up. That could be free drive. and then we will see what will happen. Currently, we do not have clear bearish patterns in place, so you do not have any reasons to go short immediately. You need to get clear patterns. For the bulls, nothing has changed, because as we were waiting for a pullback, now market stands at weekly period, but we anyway do not intend to take the position. We are still keep watching for retracement. So for daily traders, nothing has changed. What the shape price will take on this retracement, how it will turn, it absolutely doesn't matter, because here we can't take the position, but retracement hasn't happened yet. So all that we actually could do currently, just see what will happen on the market in the nearest few sessions. First up, downside acceleration, if this still will happen and the market will start to form head and shoulders, that's great. In this case, we'll keep watching on the normal price action that we're usually watching in this case. It's kind of the ABCD pattern and so on. Gradual slower action, suggesting another leg up somewhere to the 1460, 1470, and here the market could form the free drive before retracement could start. But tight consolidation around the top, this will be bullish sign, and in this case you should avoid taking any scalp short positions. That's our view on the euro.